We have so far seen what are the various deposit schemes and what are the various kinds of deposits a bank takes under acceptance of deposits. We saw the definition of banking in our first lesson. Banking is acceptance of deposits from the public. That is the first leg of the transaction. We have seen the various kinds of deposits a bank takes. Now we are going to see the next leg of this transaction of a bank. This leg is called advances. A bank having taken deposits cannot remain complacent and lock all the money in the coffer or in the safety vault of the bank. It has to be given as advance because it has to earn interest. Only when the advance earns interest, the bank will have money to service the interest it has to pay to its customers who have deposited the money. Therefore, giving advances is an integral part of a bank's job function. So I will give you a brief economics of the bank advance. Suppose a bank takes 100 rupee as deposit. Out of this 100 rupee, what the bank has to do? Can the bank lend all the 100 rupees? No. First it has to give 4 rupees to Reserve Bank of India by way of cash reserve ratio. Earlier this CRR was 15%, nowadays it has come down to 4%. So out of 100 rupees, first 4 rupees we will give to our God, namely Reserve Bank of India, 4 rupees. Then it has to spend another 20 rupees by way of SLR to another demigod, namely the Government of India. The bank has to keep another 20 rupees in Government of India bonds. Only after doing these two things, whatever is left, that only is available for the bank for lending. Approximately 25 rupees is gone in these two ventures. It has to also keep some cash, approximately 1% of the total deposit, for meeting its requirements. Whenever the customers come and demand for money, they will pay it. So the remaining 75 rupees approximately is available. Out of this 75 rupees, 40% of the 75 rupees, namely rupees 30, has to be given to priority sector. It is a compulsory condition of the Reserve Bank of India that all commercial banks must give 40% of their total advances to priority sector. Priority sector means all these poor people, middle class people, MSMEs and all those people where the interest income will be low. Bank will not be able to charge very high amount to a poor customer. An agriculturist, you cannot charge 18% because he is not going to pay if you charge 18%. He cannot afford to borrow at 18%. Therefore, 30 rupees will go. So the remaining amount, what is the remaining amount with him? Approximately 40 rupees. 40 to 45 rupees will be available with him. Only that he can lend for corporate credit or in high interest income earning credit, which will help him to boost the bank's income. Also, this corporate credit will give non-interest income. Suppose you open a letter of credit or you open a guarantee, you get a non-interest commission, which is a very good non-interest income, which is a commission which will boost the bank's bottom line. Therefore, only finally something around 40 rupees is left to the bank to give corporate credit or any other high yielding credit. So this is the basic economics of bank advance. Having seen the basic economics of bank advance, let us look at the broad categories of bank credit in India. The bank credit, any bank credit can be broadly categorized into retail credit and corporate credit. Retail credit means giving loans to large individuals, large number of individuals for various purposes. Corporate credit means giving, this will be large number of people will be involved and amount will be, each amount will be, sometime it will not be very high, will be 10 lakhs, 5 lakhs, 20 lakhs, 15 lakhs, 1 lakh, all this it will be only in lakhs. On the other hand, in corporate credit, minimum will be 100 crores. So we will give to big industries and big corporate giants, we will be participating and giving loan. So basically bank credit can be divided into a retail credit in which the loans are given to small individuals, and small firms, MSMEs, partnership firms, and corporate credit is given to giants in the industry, and it will be 100 crores, 200 crores, like that. The retail credit has got three characteristics. It is multi-product, multi-customer group, and multi-channels. Multi-product means what? A bank has got several products under retail credit: housing loan, educational loan, agricultural loan, so many loans available for the individuals. Then multi-customer groups. It is not concentrating on one customer group. One customer group may be salaried fellow, another customer may be MSME, third customer group may be agriculture. So it is not going to be given to only one customer group. It is a multi-customer group. And then multi-channels. Some loans are given in the branch itself. For example, some other loans, like for example, there is a agricultural loan given to sugarcane cultivators in association with the sugar mill. Such loans are given through the sugar mills. Some salary loans are given in some industries. So those loans are given by a tie-up with the industry. Therefore, these loans are going through several channels. So retail credit is characterized by multi-product, multi-customer groups, and multi-channels. And as far as corporate group is given various type of advances. We shall see what are the various types of advances that are being given to both retail group as well as corporate group. Now, what are the retail credit products of a common normal bank? Housing loan is the biggest retail product today. You will be surprised to know, before 1995, not a single housing loan was given by many banks. In fact, in the year 1985, I fought with my GM for giving only one housing loan. We had a very good customer and I wanted to give him a housing loan. So I was fighting with my GM. Finally, the proposal was rejected because I was told that in those days that you cannot, a commercial bank cannot venture into long-term loan, because housing loan extends to 15 years, 10 years, 15 years and all. Therefore, a commercial bank should not venture into long-term loans, and therefore that loan was rejected. But then 1990 came, all banks became universal banks. Reserve Bank of India permitted housing loans to be given. Today, the biggest retail product of any bank, the most profitable retail product of any bank is housing loan. Then educational loan that is being given to the students for completing their education. Then vehicle or auto loan. Banks give loan for purchase of cars. Banks give loan for purchase of bikes. Banks give loans for purchase of tractors for agriculturists. Personal loan, salary loans are being given by banks. Then loans to senior citizens. Senior citizens are normally not given any loan. In the case of senior citizens, they are eligible for reverse mortgage, in which a retired person can mortgage his house and then take a monthly income from the bank. It is a kind of a reverse of a housing loan. Then microfinance. Self-help groups are formed, and these self-help groups are given advances by various banks so that these self-help groups' income can go up. So this is only the, what should I say, this is not all the entire category of housing loans are not brought here. I have only given major important housing loans under the retail category. We shall see all these categories in detail when we are dealing with loans and advances in some other lessons.